A friend of mine recently signed up to drive for DoorDash to pick up extra cash on evenings and weekends. He's got a good car, great driving skills, and signing up only took a few minutes, so it must have been easy peasy. But it turns out getting car insurance as a DoorDash driver can be a little tricky. When you sign up to become a Dasher, your personal car insurance won't cut it. Why? Because you're using your car for a business purpose. Jerry's got your back, let's get into it. DoorDash does provide basic liability car insurance to their drivers, but that's mainly just to protect the company from being sued if their drivers get into an at-fault accident. This coverage only covers you if you have food in your car and you're on your way to deliver it. That means you won't be covered by DoorDash's insurance if you're on your way to pick up the food. Your own personal insurance also won't cover you since technically you are making a business trip while doing the picking up the food. So it's important that you purchase extra business use coverage or commercial auto coverage from your provider to make sure that you and your car are safe on the road. Your car obviously matters a lot when you work as a DoorDash driver. To maximize your net profits, what car you drive is crucial. A fuel-efficient ride like a Honda Civic versus a gas guzzler like a Jeep Grand Cherokee will save you major bucks on gas. Reliability is important too. Having your car break down during prime delivery hours would really put a ding in your side hustle cash flow. Making sure your car is maintained and checked regularly is also key to not missing out on earnings. When Uber first launched in 2010, no one could have predicted how significant it would be in shaping the gig economy of the US. More and more people started using their personal vehicles for work. As of 2023, about 36% of US workers are part of the gig economy, and if the gig economy keeps growing at its current rate, more than 50% of the US workforce will participate in it by 2027. At the beginning of this boom, insurance companies had no guidelines in place to insure the gig workers. In 2013, an Uber driver struck a mother and her 2 children in San Francisco, resulting in a child's death. Uber promptly released a statement claiming the driver wasn't providing service on Uber's platform at the time of the accident. The debate over liability was very complex given the 3 parties involved in the services: the driver, Uber itself, and the passenger. This high-profile case spurred California and other states to require gig share platforms to provide primary insurance coverage to their drivers. However, insurers themselves were still cautious to embrace this uncharted territory. With all the uncertainties involved with gig drivers, writing new policies was still risky for the providers. But demand grew exponentially. More regulations from more states and lawmakers eventually pushed insurance companies to provide better hybrid and usage-based policies for gig workers. Today, major providers like Progressive, Allstate, and Geico all have broad coverage options for gig workers like DoorDash drivers at a very decent price. If you drive for DoorDash without telling your insurance provider and you end up getting into any kind of accident, your claim will be denied and your policy will probably be canceled immediately. Also, not disclosing your employment to the provider opens you up to insurance fraud investigations, which could affect your entire livelihood. If you plan to drive for DoorDash or any other kind of rideshare app, talk to your agent, or even better, just download the Jerry app and compare and shop for car insurance for free in just a few minutes. The gig economy has helped millions of Americans earn a living. As of 2021, more than 2 million Dashers work as DoorDash drivers across the US. If you're a DoorDash driver, it's crucial that you pick the right coverage for yourself and make sure that you're safe on the road.
Jerry, the All Car app that's got your back. Because we car.